Hello everyone, this is Thomas Fross with Fross and Fross Wealth and SII Investments with our August 2012 monthly video update. Now during the next couple minutes we're going to talk about some of the key drivers behind this month's stock market as well as economic performance. Please do me a favor, please read the required disclosure statement that's attached to this video. Well, we saw a nice rally in the month of August as investors seem to drive up equities on hopes that the Fed will undertake a further quantitative easing. We still haven't seen that easing, but markets closed positive for the month. As a matter of fact, the S&P gained 3.05%, the Dow gained 1.65%, and the Nasdaq picked up 5.4% just for the month. If you go back to the beginning of June, the S&P has gained just a little over 10%. And most analysts were surprised by the stealthy summer rally, as corporate revenues are down and weak economic fundamentals just don't seem to support this kind of performance. And we can blame officials at the Federal Reserve and European Central Bank or the ECB for building up expectations of aggressive action to such a feverish pitch. Now the downside of the rally is that in our opinion it's held up largely by hot air. You see, trading volume as well as volatility were both low for the month. Two indicators that often foretell a market peak. As we get closer to the end of the year, you can also expect additional media focus on the impending fiscal cliff, which is the big expiration of the Bush tax cuts and government spending cuts due to kick in January 1st. If the federal government does not develop a plan, it could definitely rein in market gains for the year. August also saw the release of some important economic news. Let's take just a moment and discuss how this affected market performance during the month. August was a big month for corporate earnings, which continued the trend of weak revenues, but at the same time strong profits that were established in July. Now the upside of this is that while demand in many sectors was fairly weak last quarter, companies seem to have gotten better at doing more with less. Retail sales in August beat expectations due to a strong back-to-school season, which could forecast robust holiday sales. These two shopping seasons, that being the back-to-school as well as the Christmas shopping season, are by far the most important for retailers. So strong performance there could mean upbeat corporate earning reports next quarter. Also, the University of Michigan consumer sentiment reading exceeded the consensus estimate, indicating that consumers are feeling a bit better about their own prospects for the economy. A rising consumer confidence raises the odds that American households will sustain the spending that led to the July's pickup in retail sales, setting the stage for stronger growth this quarter. Also, the unemployment rate, now this is bad news, the unemployment rate unfortunately ticked upward a notch to 8.3% in August, and payroll numbers were lackluster for the month. The labor participation rate shrank and small businesses continued cutting jobs, two factors which led to the rise in unemployment. August was fairly quiet in Europe, interestingly enough, as many officials took off for vacations around the middle of the month. Let's see, Spain was in this discussions with Eurozone leaders to purchase some of their sovereign debt to lower interest rates in their country. Also, we feel that Greece is teetering even closer to a complete default. And despite the ECB reassurances, many companies are quietly preparing for Greece exiting the euro soon. A host of market moving events are on schedule for September. The ECB will have a policy meeting September 7th, where it's widely expected ECB chief will announce a euro-wide bond buying program. Also, the FOMC will meet in mid-September. And although we can hope for some hints from the Fed about quantitative easing plans, analysts are pretty mixed as to whether they're ready to take action yet. Currently, economic indicators are pretty mixed, indicating that the Fed could put off action until after the November elections. On the last day of August, Ben Bernanke spoke at a global economic summit, and there he reiterated the Fed's commitment to taking action if necessary, but at the same time he failed to outline a specific timeline. We'll also see the August jobs report released early in the month of September, which will give investors a fresh read on the economy and whether or not we can expect Fed action anytime soon. Barring a huge miss in payroll, we're not sure how likely that is. Now, as we move into September, it wouldn't surprise us if we saw a stock market retreat from these unsustainable highs. How much markets decline will depend on a number of factors, such as the economic data, any announcements from the Federal Reserve, and any new developments out of Europe. Now, here's the good news. Market retreats usually present opportunities for value investing, and we expect plenty of additional growth opportunities later in the year. One thing we assure you of, we will be watching things closely. Finally, if you haven't registered for the drive-in movie, we'd sent out an invitation for the movie that we're doing over at the Polo Fields in conjunction with the law firm Macklin Burnsted. It's going to be on Tuesday, September the 18th. Please do so as soon as possible. We can't wait to see you there. We still have some room for guests also. Once again, this is Thomas Fross with Fross & Fross Wealth and SII Investments signing off for the month of August 2012. I certainly hope you found this commentary interesting and informative. We welcome any questions or comments that you may have. If you'd like to discuss what you heard in this update or would like to talk about your personal financial portfolio, please give us a call, 352-205-7800, 352-205-7800, and we're delighted to be of service to you. Look forward to seeing and talking to you soon. Have a wonderful day.